Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. The break higher through the top of what had been a prospective diamond pattern formed over November 2021 to July 2022 seemed at the time, back in late August, to be the beginning of a significant move higher. However, after reaching up to the high of 2012 at 241.05 and just short of the high of November 2011 at 243.40, prices peaked out and fell away again, though in a much more considered manner than what they did rising up there in the first place. In early September, the market slipped down below the February to date downtrend, currently at 220.30, that made up the upper trend line of the diamond pattern. For a little while in September, prices had been supported by the congestion from July and August, mainly in the 213 even to 217.5 area. But this did not last, and we've seen prices drop to the base of the Fibonacci support 207.35 last week and this week, though we've not closed below it as yet, but we're very, very close to it. Last time I said something controversial, and I quote, "The next part is a little controversial. You see, there is the possibility that the action from March or even April could be seen, and I'm stretching the boundaries here, can be seen as a possible reverse head and shoulders in construction. I'm not very happy about saying this, but it just might be seen as such, with either a possible split first shoulder or a pattern masquerading as a first shoulder before it actually forms a first shoulder. I have not marked this pattern, down this pattern because there really isn't enough data to accommodate it, but it is something to look at closely. Right now, we may be forming the second shoulder." And that's the end of the quote. Since the time I said that, we've been testing low, and we are coming close to the limits of where a second shoulder dip to, namely the November 2014 high at 201.35, where the second shoulder dip to would be. Thus, if we turn back up in the next week or two, then perhaps, just perhaps, we will have this awkward-looking reverse head and shoulders pattern. However, if we continue lower, then perhaps, just perhaps, we can look again at this possible diamond pattern that was previously mentioned, and maybe, just maybe, it will become a very ragged, force-breaking but large, lopsided diamond pattern. It is up to the market to decide if it really wants either of these two patterns or something else completely. I'd suggest conservatively that it has until the middle of November to really decide, as that is what it looks like right now. London coffee. The market peaked at the end of August by reaching the secondary harder to reach target X1, which I've conveniently taken off because it's been filled, in the 22.95 area for the rectangle formed over March to June, falling away lower the very next day. The question I posed last time is whether the whole action since about early August today is whether it is a type of head and shoulders pattern or not. Late 2 weeks ago, the market breached the supposed neckline of this pattern, if you can call it such a thing, a neckline. It's currently at 21.62. But it was only last week that we saw action below the supposed neckline, and then we only saw prices be held up by the slowly declining long moving average, currently 21.42. It was whilst I was studying this supposed neckline that I saw another clearer pattern that was a much better fit for the recent action. Now, I have highlighted the pattern in a thicker red color so to become more obvious. It is a late August to date falling wedge pattern, currently 21.22 to 21.99. The pattern is a very reasonable fit for the action, and it has the requisite number of touches per side to qualify as a mature pattern. The question is whether the market will follow through. I can't give a definitive target in either direction for this pattern, but I can give a primary size of the move, should either one of the two trend lines above and below be broken. A primary move higher would be right now something in the order of about $145 on top of the break of the upper trend line, whilst a break lower would be something like $68 off of the break of the lower trend line. Now, something to watch out for. False breaks, they are very prevalent in this pattern, especially in a break lower, known simply as the dip before the market turns back round and shoots higher. This is one to watch, as we are once again tackling the long moving average below, currently 21.42. As well as entering into the frame, we have the slowly rising short medium moving average, currently 21.17. I suspect the reinforcement of the long moving average of the short medium moving average may be quite interesting to watch. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.